Hey guys, I wanted to make a follow-up video about SJT, San Juan Basin Royalty Trust. Um, this was one article from, and I don't have a account up there. You can get like a week free account. I'm not going to um, pay for it. I don't pay for anything. I mean, I don't pay for any kind of, uh, you know, stock information. But this was dated almost a year ago. Well, actually, over a year ago. And I keep saying oil, but it's actually natural gas that they're in. Most of the other trusts that I have are mainly oil. Um, It says it does not actually own any land or wells, but has a 75% net overriding royalty interest. The trust has a 75% net overriding royalty interest, completely different from ownership of land. 96.8% comes from natural gas and 3% from oil. There's no employees. You got 5,000 wells working for you. So it looks like they take the net proceeds and multiply it down to 75%, or which for 2021 was 37 million, which is quite higher than 2020 was. That's crazy. Back then it was 77 cent. No, no, 8 cent a unit, and before it was 1.5 cent. No, that's 77 cent, and that's 15 cent. Sorry. The income that is distributed to unit holders depends on three major factors: production, expenses, and price for natural gas oil. The trust has no control of any of these variables. Hillcorp Energy bought the San Juan Basin interest from ConocoPhillips in 2017. Hillcorp is owned by Jeffrey Heidbrand and is the largest privately owned oil and natural gas company in the U.S. Hillcorp controls all operations, while SJT does not sell the natural gas at the Henry Hub. The SJT unit price is highly correlated to the Henry Hub price spot. Let me see. Those very long-term investors. Yeah, I can't. When you don't have a subscription, it tells you just enough to get interested, and then won't let you see anymore. Um, Sorry about that, guys. But basically, what now this site I recommend is suredividend.com. I just use this site that tells me what the monthly payers are. There's a lot more than that when you include, um, ETFs and managed funds and covered calls and all kinds of stuff. But so there's 84 monthly dividend stocks that they currently track. Now, the other article was saying that it's really not a dividend. They said you're taxed at the higher, like the income level, so that it's better to have it in a Roth, maybe, since a Roth you're not paying taxes on. Well, all the income you get from it, you never pay taxes on it. Whereas in a taxable account, you will have to. Well, this says royalty trusts are risky, blah blah blah. It did suspend its distributions for a while. Now, to me, natural gas is the thing of the future. Um, so I think the price of natural gas in the future will be higher than it is today. And what's interesting is, um, you know, what the politicians don't seem to understand is that these oil wells, they have to plan out like 10 years in advance. You know, it might take even 3 years just to turn something on, and when you're drilling for oil, the what you're not looking for is natural gas, and that's like a byproduct. And then now they're drilling for natural gas, and but the byproduct is oil. So I don't know. I read something the other day, and it was talking about that a lot of the people are going back to the original places they found natural gas because, like I said, before they were looking for oil, and natural gas was just like a byproduct. Uh, but now they're actually looking for natural gas. And I'm not sure when this was written. Let me see. March 5th, 2023. So it's not that old, just a couple months old. But it said it's likely to offer $1.60 this year. And if you're paying $7 to earn $1.60 in year one, that's really good. I mean, if the stock was say $10, um, and it's not really a company, like I said, it's a trust where it's based on it's royalties basically, and I want to say this is a little off topic, but Star Wars, the guy who made Star Wars, he did a royalty deal where like every action figure sold, he gets like $1 or something out into the future, and or 10 cent or whatever it was. Um, he took a reduced salary, and he retained the rights to all merchandising related to the franchise, and retained all the rights to the sequels. But anyway, maybe I was wrong on that, anyway, made the guy a billionaire. He sold the rights to the Star Wars franchise to Disney for $4 billion in cash and stock, but those 37 million shares over the years have grown to 7.4 billion. But anyway, I was just trying to make an example of what a royalty is. Um, I think in Alaska, for example, and there's um, a trust up there that I have. I want to say it's BP or something. It's a little different, I think, than BP, the gas station, but maybe not. Um, but basically, if you just live in Alaska, the state of Alaska, you get like around $10,000 just from oil revenue. And one of the TV shows I used to watch, the guy got in trouble because he moved out of Alaska. It was like this family that just lived off the land, and but they had moved away from Alaska, but they were still trying to get that $10,000, and they got in trouble for it. It has hired independent petroleum engineers, conservatively estimated that trust is likely to continue to produce for another 10 to 15 years. And I did see something, I believe it was this year, something that said that is, at least for 10 more years. And to me, that's important because if you can get your money back within 10 years at, say, 10%, if say the stock or the trust is $10, and that first year they make $1, well, at the end of 10 years, you get your money back. And so if it stays open 15 years, you'll be making a profit those next 5 years after that. Example: you buy a beach house for 200 grand, and it's hard to do that now, but 30 years ago you could, and you rent it out for 20 grand a year, and during the prime season, and within 10 years you have your house paid off, and you have at least another 20 to 50 years to be able to enjoy that house that's basically free for you because it you made a wise investment. No, I have no idea what 84 million cubic feet of natural gas looks like, or 234,000 barrels of oil. Says natural gas hit a 13-year high. Ordinary income or tax to the individual marginal tax rate. This just goes back 2014. The yearly, now this isn't monthly. The yearly distributions was $1.28, 36 cent, 29 cent, 83 cent, 38 cent, 17 cent, 15 cent, 77 cent, and $1.57. So what we were looking at before was the yearly distribution. Now the monthly. But for the year, it's had a 16.9% yield at a price of 10.82. It's currently at 7.10, so it would be a hell of a lot better than that. Probably be closer to 30%, and this is saying $2. They were estimating the yearly distribution to be $1.60. This is saying 202. We won't know for sure until the end of the year, but if it's $2.02, that's even better. I mean, if you buy Walmart, I mean, you're paying $155 today to get a $2.28 dividend a year from now. Well, I mean, you get it spread out every 3 months, so 228 divided by 4, or divided by 3, I mean. But that's not much. That's 1%. Granted, Walmart might be here for another 100 years, whereas this oil well be dead, and this gas well be dead and gone in the next 10. But anyway, a couple people had a couple questions about SJT, and I'll be honest, I don't know everything about some stocks. I'd like to know enough I feel comfortable purchasing them. And sometimes in the stock market, you kind of got to be in it before you know what you got sometimes. And that's kind of bad to say, but sometimes that is true. But knowing that this is mainly like a pure natural gas play, the people behind this, I want to say it's like ExxonMobil and BP or someone like. I want to find the article that showed how long the different trusts were going to last. They had them all the trusts listed, and it had each one about how much longer they have. Some of the ones now are penny stocks. They're true penny stocks, because they really don't know how much longer they got. This one says if it stops making $1 million 2 years in a row or something, that it's going to end. But right here, it will terminate if raw nickel falls below 1 million annually over a consecutive 2-year period. And we saw the royalty income for 2021 at what, 8 million or something? And then for 2021 it was like something like 17 or 18 million. I just wanted to get some cash flow, and I don't know if you guys know Warren Buffett very much, but he was the whole reason why I got into investing, and um, I read some books. Um, One of them was called The Intelligent Investor. Um, I watched YouTube videos on Warren Buffett, his speeches. I read Berkshire Hathaway's annual meeting um, comments. I read a book that just had all the annual letters combined, and a little bit about his mindset. Like, Warren Buffett doesn't think of $5 to pay for a haircut today. The way he looks at it is this $5 at 10% interest, in 50 years will be worth $5,000. So he doesn't see $5 as in $5 today. He looks forward years, and so that's how he thinks. That's how his mind thinks, and I think a dividend investor, and then more strictly a value investor, just the way their mind thinks is different than the average person. And another an audio book that I like is The Richest Man in Babylon, and that was based on a really almost like a true story. I mean, of course, it's made up a little bit, but the tablet was real. Babylon was real. The word Babylon means confusion, but Babylon was probably the richest place, and or one of the richest places in the ancient world. I know there was a guy in Africa named Mansa Musa or whatever, who had so much gold and stuff that he had crashed the market worldwide for years. And I believe that is where the desert is now in northwest Africa. I believe that's where the region that he was from. Because you got to think, a couple thousand years ago, what was desert was lush, green, paradise, and now, that those lush green paradises now are desert. But anyway, sorry to get off track, but yeah, I just wanted to take a brief look at SJT a little more, and it says investing in right now essentially making a bet on two things: high oil and gas prices and longer than expected lifespan on the trust. But my take on it is guaranteed to last 10 years. It may not last 10 years if the production increases, but if the production increases, the amount of money you get is going to increase as well. So as long as I get my money back within 10 years, I'm fine with the investment. And despite what these guys think is risky, I think it's very very safe. There's no company. It's just distribute is royalties. So there's no no employees it has to pay, or it just has it's just a bet that the in the future the natural gas prices will be higher than they are today, and I think they will be. And one interesting thing about the U.S. is everything is here. Like the oil, the gas is here. The refineries are here. The place where we use the energy is here. Whereas in other parts of the world, you first have to get it out of the tundra in the middle of nowhere, where there's five retirees making $2,200 a month living in Siberia, and then it has to travel 3,000 or 5,000 miles or 10,000 miles under a pipeline or something to get somewhere where it's actually consumed and used. And I never understood why they had a problem with the pipeline in America that was going from Canada down. I mean, I understand that there was a leak or something, it could harm the environment, it could harm the animals, it could make people sick, etc., etc., etc. But I think a pipeline is a lot safer than putting it all in a big tanker ship. And how many oil spills have we seen around the world in the last 20 years, that have damaged so much of the environment? But I still think we're going to need oil. We're still going to need gas, and this one is more of a pure gas play. I think it said 2 or 3% is oil, and then the rest is gas. So I like seeing a check in the mail every month, and I think as a new investor, seeing your money grow. I mean, it's. I think what happens to people is they see the stock market go up, they put their money in it, and then they see it drop 30%, and then they're like, my 401k that used to be worth 400,000, now it's worth 250 or something, and then they panic and sell. And the beauty about dividend stocks or dividends in general, or royalties, or investment trusts or whatever, is if the price goes down. Like in this case, the price was 14 last year, and now it's 7. It's gone from that's a 100% drop, or a 50% drop. It would have to go up 100% to get your money back if you bought it at 14. Or it doesn't show here, but I could have swore it went at least to 14 at some point. It says 52-week range to 1543. But anyway, so like if you bought it up here and you're getting, like, I think up here you were getting maybe a 6, I don't know, close to 10 maybe. And then you're down here you're getting 20, or whatever. You're getting a better yield on cost and your dollar cost averaging, and you're able to accumulate more and more shares when the price is low. Um, Now, if you think the price is going to go down to one, or you know that tomorrow is going to go to zero or something, it might be a good time to sell. But like I don't know what happened here. I hadn't gone back and looked at all the way back here, but I definitely think natural gas prices will be higher in the future than they are today, and I do think the gas wells will be online and operational for the next 10 years. Now, if they're like less than 10 years, say they're 5 years, then you just take a loss, take a tax write-off or whatever. But like these are some other ones that I have that are also. This one right here, what used to be 80 some dollars. CRT is also a royalty trust. This one was a penny stock. I think they did a reverse split. I'm not familiar with this one. But these are other oil trusts.
Humana's dual eligible special needs plans give.
But anyway, I was reading the comments, and someone had a question about SJT, and so I just wanted to answer that. But see, like right here it says SJT announced a cash dividend of 0.017 with the ex-dividend date of June 29th. So that sucks. That's less than 2 pennies per
Humana's
unit.
dual eligible special needs plans give you an allowance.
But the good news is, I think, like again, I keep repeating myself, but the good news is this gas well is going to be operational for the next 10 years, assuming there's no nuclear bomb or natural disaster or tsunami or volcano that blows up the oil wells before then. I like to think about, you got 3,000 wells or however many wells working for you. You're sleeping at night and those wells are pumping. Those wells are selling that natural gas day in and day out, and you don't have to work for this money. All you have to do is invest in this trust and hopefully you'll get your money back and make a profit in the future. George Lucas, he wasn't thinking about the money that he wanted right now. He was thinking about the money he wanted in the future. And that's what the true great investors do, is they don't think about the money right now. They think about what it's going to be in the future. Now I paired this one, and this one they call quote quote risky. I don't see how making 20 or 30% on your money, earning $2 for you're only investing $7 and you're earning $2. This PE right here is a 3.3, which means you would get your money back in 3 years. I'm just assuming that you get your money back, and if it was paying 30%, yeah, that would be 3 years. or a little bit more. 3.5 years, 3.25, 3 1/3 years. 30%, 30%, 30% is 90%, and so yeah, I don't think it's that risky at all. But I paired it with something that was very safe, in my opinion, which was Main, MAIN, the real estate. Um, now I'm expecting real estate in this country to crash 30 to 50%, and when that does happen, this could tank. It could take, when COVID hit, it looks like it took a dip, went from 40 to 20. Look at that, boom. But the P ratio is 11. It's not far from 10. So basically, if I get my money back in a little over 10 years, I'm happy with that. I think this quote is a little high. It might be closer to 6.7 or so now. But if you're getting inflation is normally 2%. So, I mean, obviously this last year or so, the government made a big mistake, and they increased the money supply 40%. And they basically gave away free money during COVID, and then they put a quick stop on jacking up the interest rates, the 7 and 8%. And now people can't even afford to buy a home now because of the 7% interest rate. Plus the home values are inflated because the home prices went up 15% last year alone, and in some cases they've gone up 40% in the last 2 years. Real estate should only go up with inflation. Should only go up 2% a year. There's no there's nobody that's going to tell me that a home last year is worth 15% more just because the real estate person told me it's 15% higher this year. That's a bunch of bullshit and a baloney. Historically, inflation has been 2% in this country. It was an anomaly to increase the money supply 40%. But a lot of the economists are stupid in this country. They don't listen to people that know what they're talking about, and they think the velocity of money is stable. And when the guy invented the theory, it was stable. It was stable for a very long time. But the velocity of money is not stable, and when they printed all this money out of thin air, the money just sat in the bank and it wasn't moving anywhere. It wasn't exchanging hands. Let's say, I go to McDonald's and I get a check for $10, and then I take my $10 and I spend, $3 at Wendy's, and then I go and spend $2 at the 7-Eleven, or then I go spend a couple dollars to see a movie. That money's moving, and then the money's changing hands, and that's what's called velocity of money. But during COVID, the money just got stagnated. There was no goods and services. The 70 or 80% of the U.S. economy is based on services. And if there are no services being offered, there's nobody cutting your hair, there's nobody being your waitress at the restaurant because all the restaurants are closed. There's the velocity of money had come to a standstill. But not only that, Amazon, for example, during COVID hired 800,000 employees. Their workforce was 800,000, and then it doubled during COVID. And then now all the big companies that are paying these huge salaries and are cutting 20, 30,000 jobs left and right. You know, you got people stealing from Walmart, you know, and they're closing Walmart stores because they can't deal with the theft. And the stores are not profitable because people are stealing. And in this country, you have the average baby boomer has 100 grand. They spend 50,000 a year. Social Security is 20,000. So you're either going to have to live on 20,000, or you're going to have to supplement your income or stretch that 100,000 to last. You don't know how long you're going to live for. You might live another 20 years. If you know, people live to be 100 all the time. If you retire at 65 and you live to be 105, you still got to live 40 more years. And so you would have to make that 100 grand last 40 years. So I hate to get off on a tangent, but I guess I jumped right on the bandwagon. But you know, a long time ago, the average home in America was probably 1,400 square feet. You had two adults, 2 children. Nowadays, we have a lot of single people. We got single parents. There's only one person in the household that's working. The birth rate around the world is negative. We don't have 2 children being born anymore. There's less than that. So what happens when you have less of a population and more houses than you have people? People don't need, if the people aren't born to live in a house, you know, like, you don't need a house for them. You know, you got a war that I don't know how many people killed, maybe a couple 100,000 so far, maybe millions, I don't know. But when you have COVID, when you have natural disasters, when you have wars, when you have earthquakes and volcanoes and tsunamis, and you know, the population will decrease, not increase. So there's going to be more homes for sale instead of less homes. You know, if there's less children being born, you need less. You know, there's more homes available for them to buy. The only reason why the housing market is still high is because very few companies are building single family homes anymore. They want to make the most money, and the least amount of profit is in single family homes. And you know, you got to get permits and all the, you know, a lot of politics and stuff involved, and but it's not real. It's a fantasy. It's fantasy land. You know, it's not real. Just because, I mean, if I had bought a house 2 years ago and my house went up 40%, guess what I'd be doing today? I'd be selling. And what would I be buying? I'd be buying producing assets, real assets that produce real income, like Maine, like SJT. They give you a monthly income every month. You can look at Maine over the last. You know, if you bought this thing and let's say $10 in 2008. You basically 4 times your money. Plus, not on top of that, I don't even know what your dividend would be buying it at 10. But if you're getting a 6% at 40, it's probably 4 times that. So, yeah, but there was a tulip thing. I think I mentioned this one time in one of my earlier videos, where there was a tulip mania. You guys aren't even going to believe me. Let's see. Let me see if I can find it. Look, it's even in the wiki. It started in 1634 and then dramatically collapsed in February 1637. The first speculative bubble or asset bubble in history, I guess that was normally documented. At the peak of tulip mania in February 1637, some single tulip bulb sold for more than 10 times the annual income of a skilled artisan. Let me repeat that again. At the peak of tulip mania in February 1637, some single tulip bulb sold for more than 10 times the annual income of a skilled artisan. Now, in America, we know that if the average millionaire does not inherit their wealth, they're first-time millionaires. They're teachers. They're engineers. They make $50,000 a year at a normal job. They save 15% of their income and invest it in the stock market, the S&P 500 index, for 40 years. And then when they retire, they have $1 million or so. They got their house paid off. They can pay for their kids to go to school and not to be in debt. Research is difficult because of the limited economic data from the 1630s. But this exact thing is happening today again. It happened in Bitcoin, where something that's not even gold, that's like imaginary in digital space somewhere, that you got to have a pass. I got a cousin who has a bunch of Bitcoin, and he don't even remember how to get into it, because he did it years ago when he was in college. But that must be frustrating. I know you got a couple $1 million sitting somewhere and you don't even have access to it. But maybe I'm wrong. Maybe a Bitcoin will be worth $1 million one day. But when it's gone from less than $1 to $60,000 for one, and I think the same thing was in the housing market. I mean, you got some shacks for $1 million, nowadays. Homes that used to be worth $30,000 are now $200,000. That's tulip mania. It's not 10 times the annual income of somebody, but in California you got some houses that would take most people 100 years to pay off. So much for a 30-year mortgage. They couldn't even pay it off in 100. And that's why you got so many people living on the sidewalk in little tents and stuff. But the population that are seniors right now that only have $100,000 that are thinking they're going to retire, they're either going to have to downsize from the house they're currently in, which means sell their home and go into something smaller, or go back to work. Those are their two options, or they could just die and then they wouldn't have to pay any on their debt that they owe, because they'll try to get you to pay your debt when you're dead, but if like a child of a parent that may have been in debt, as long as your name is not on that lease or that piece of land or property, like you don't owe them a dime. But so I believe, and I might be wrong, but it's already happened in big cities. It's happened already in major cities around the U.S. Where, if what people don't realize, the politicians like to pump this narrative of electric power and blah blah blah. Gas and natural gas and oil are very cheap, and without that being so cheap, I remember not too many years ago when gas was $5 a gallon, and people couldn't even afford to fill their tank up to even go to work. It was more expensive. They were spending more money. If you only make $10 an hour and you work, 8 hours, let's just keep it simple. You work 10 hours a day, that's $100. Well, if you got to commute an hour to work and an hour back, and it was costing you $50, $60, $70 to fill your tank up, and you could spend half of a tank just going one way to work, you can't afford to go to work. So in order for the system to work, for capitalism to work, there has to be affordable energy. There has to be affordable housing for people to live in. Right now, it's not affordable, and that's why you see so many people on the streets. That's why you see so many people robbing Walmarts and stuff. And a lot of people want to work. And some people just don't want to work. And I think I've gone on a real wide tangent here. I was just going to talk about SJT and keep it simple and keep it moving. But I kind of got caught up in a little bit of everything. But yeah, my macro theory is, the population around the world is declining. People can no longer afford to have children. It costs $1 million to raise one child. And college has gone up year after year after year after year, and kids are coming out of college and they're 100 grand in debt, 200 grand in debt. They're paying 20% interest on their credit card. They got the credit cards maxed. They got 3 or 4 credit cards maxed. They're buying brand new cars that they're, before it used to be able to pay a car off in 3 years or 4 years. Now it's taking them 7 to 10, and they're, be lucky if you're paying less than 5%, 4 to 5% on a car loan right now. And then you got medical, and medical is what, a quarter of the economy or something. I mean, the medical, all they have to do is put caps on how much you can sue for. Hey, you kill somebody, you sue them for $1 million. No, we're going to sue them for $20 billion. And then so then everyone else has to pay the $20 billion just because somebody sued them for $20 billion. If all men are created equal, men and women, and all races equal and stuff, why should one family get 20 billion and another family only get 500,000? Just streamline it, make it $1 million. But that's the cap. You can't get more than that. And that is the reason why medical costs are so expensive in this country, is because of lawsuits. And everyone, I remember 10, 15 years ago, people were lining up at the hospital door every time it rained just to slip and fall in front of the hospital so they could sue the hospital. Everyone that comes into a facility now, they're always looking to sue somebody. And so, I mean, it's not sustainable. You can't increase education in this country 20 and 30% annually, and medical expenses 20 or 30% annually, and housing costs 15% annually, and food and gas. I mean, gas was under $2 not that long ago, less than 4 years ago. It was under $2. Now it's $3.50, $3.40. That's a big jump. That's almost a double. If it was 2 and it goes to 4, that'd be 100% increase. So they've increased the cost of going to work 100%. They've increased the cost of food. They've increased the cost of rent or real estate. And the people that are impacted by this the most are the lower people on the lower socioeconomic ladder. And like I said, if you work the same job for 40 years and you never get a pay raise, 50 years, you work the same job for 50 years and you get the same salary, you never once get a pay raise, and you never saved a penny, and at the end of 50 years, you lost 100%. But if you can just stay ahead of inflation is historically 2%. This COVID thing was an anomaly, and it's going to take us a couple years to get out of the situation that because the problem is when interest rates are zero and you need to stimulate the economy, you don't have a tool to do that because you're already at zero and you can't go below zero. But they've definitely put a halt on. The difference in a 2% interest rate for mortgages and a 7% interest rate might be the difference in a $1,400 monthly housing bill and a $2,700 housing bill. It's an extra $1,000 or more a month, or maybe $1,500 more. But people can't afford it. They can't afford it, and um, something is going to change. And my thoughts, for me personally, is buy a couple acres of land and build your own house. Build a get a tiny home, a shed or something from Home Depot, and fix it up for 40 grand, and then once you got that paid off, then you can upgrade and go from there. But I want something I can pay off in 3 to 5 years. I don't want to be a slave to a mortgage for 30 years, for 100 years. You know, the thing was back in the day when people were buying the houses that were 1,500 square feet, they were required to put 20% down, which means they had cash in their pocket to pay for a fifth of the house. If the house was $100,000, they had 20 grand in their pocket. Nowadays, well, I know for veterans, for example, you have to just pay the closing costs, which is, I don't know, 3 to 5% maybe. So, and people buy the biggest house that they can't afford. They buy the best car that they can't afford. I remember a guy in the military when the salary was $1,000 a month. He was paying $600 a month just for insurance on a Mustang. He had a nice car, but like I said, that wasn't even the car payment. That was just the insurance on the car. That wasn't even his car payment. But luckily, he had a good girlfriend that fed him, or I don't know how he would have survived. But anyway, I recommend SJT. I recommend Maine. Like I said, I'm not a financial advisor. This is not financial advice. This is just my journey, and I'm sharing you what I think is. It's not a stock that's like SND that's $1.5 that I think is worth 10 or 6, and that pays 0 dividends right now, but in the future it might go up 5 or 6 times what it is currently. This is just steady monthly income. You're going to get somewhere between the two, probably around 10% or more, and if inflation's 2% historically and you can get 10, that's good. I mean, everybody the last couple of years basically have got poorer unless they had bought financial assets when they were getting their free money in the mail. I know when I was in between jobs and I was getting some free money, I was investing that money the best I knew how, and trying to buy financial assets, because when inflation happens, those financial assets go up, whether that's real estate, whether that's the stock market. Now, the reason the tech stocks have gone so bad lately is because of the interest rates. In a zero interest rate environment, their prices go way up. But when the interest rates are 7% and money is no longer free, and you're actually having to pay 7% interest on the money you borrow, it makes, before they were having companies they were having all these SPACs. They were companies that made no money. They weren't even real companies. They were not profitable. They were losing money, and they were supposed to lose money for years. DraftKings, for example, I predict it maybe 10 years before they start making a profit. 5 or 10, no, maybe 5 years. 5 years maybe. But you got people buying things that don't even make money. They're not profitable. They're tulip mania. They're pies in the sky. They're playing the lottery. They're not investing or making wise decisions. They're I mean, why should Bitcoin be worth $1 million in the next 10 years? What does it do? Does it make your life any better? I mean, I do know that the credit card companies take like 1% or less than 1% or something off of every transaction around the world, even if it's a fraction of a penny. And you got thousands or millions of billions of transactions every second around the world. I mean, even a fraction of a penny adds up to a lot of money. So I can understand if somehow that gets around that, but I cannot understand spending $20,000 or $60,000 on Bitcoin right now. I just don't see it, and maybe I'm wrong. And like Buffett says, you got to invest in what you know and what's your circle of competence, and maybe I'm a janitor and all I know is cleaning bottles or something, or I know broomsticks, or I know buckets good, and I know who makes the best bucket and who makes the best broomstick, and or who makes the best cleaning solution, and if their universe is 5 companies, 6 companies, that's good, that's fine. It's hard to stay on top of 20, 30, 40 different companies. It's really hard to even stay on top of 9 or 10. So ideally it's better just, I think, to buy great businesses, like Buffett said, at fair prices, and then you don't have to micromanage them. You don't have to look and see if a tsunami's coming next week. You don't need that stress in your life. You can invest in these 5 companies, knowing that they're still going to be there 100 years from now, 50 years from now, and maybe you won't get a 20% return, but maybe you'll get a 5%, and you're happy with the 5%. But anyway, thank you for listening to my rant. Sorry to be long-winded, but leave a comment, and if there's something you want me to talk about, or something you want me to look at, or if you got you could tell me what your portfolio is, and what I might think about it, and like the reason the Warren Buffett made so much money on that chocolate company was, like for Valentine's Day, your wife or your girlfriend wants the same chocolate every year. It's like a tradition. So like, they didn't have to spend any more money on the ingredients to make it. Maybe they put a prettier label on it or something, but they could increase the prices year after year. Gillette shavers, they kept adding these extra blades. You only need 1 blade to shave. You don't need 5 or 6. But they kept and more blades, and those things are expensive. I mean, you get a razor now is like $10, and you get a cartridge and it's like $30 or something. Um, but people are paying. People pay it. Um, the problem with things like airlines, for example, is they have to have a huge capital expenditure every so many years because those airplanes get old. They need repair. They need workers to work on them, mechanics. They need more new wheels. They need more, new side panels. They need new technology on the inside. A lot of the planes are still small from when the U.S. population was skinny 50 years ago. Now the population's fat because they've been eating fast food and sodas like water for the last 50 years, and everybody's got diabetes and everybody's fat and and now it takes 2 seats or 3 seats to sit somebody instead of just 1 seat. But that is a huge capital expenditure every year. Um, and then people are just I don't know what it is. Flying is the safest thing, the safest form of transportation in the world, and people are just terrified of it, and they don't care if they got to drive 3,000 miles. They're not flying. And some bad event happens, a rare event, and one plane out of a billion falls out of the sky, and someone gets hurt, and then people are scared to fly again. But or a pandemic happens and the whole industry is shut down for months, if not years. And the same thing happened to the cruise line industry. But so you want a business or a company or industry that has a moat around it that can protect itself. And I think the best one is something like trash pickup or something. Like waste management. It's boring, it's ugly, it stinks. You got to pinch your nose and look the other way and to hit the buy button. But it's been a good investment for people over the years. I mean, I wouldn't buy it now as 30 times earnings, but I mean, look at this thing. If you bought it in 2000 at $16, that's a 10 bagger. 10 goes to 160. That's 10 times your money. A $6 billion company turns into 60. I mean, you're getting a 2% dividend, so almost a 2%. So maybe you're keeping up with inflation, but I don't like it at this price. Maybe if it fell in half or something. But I mean, this is the power of investing, guys. Look at it in '89. It was $2 and something, and then fast forward 30 years, and it's 166. For every $2 you invested, you made $164.74. That's incredible. I mean, you're not going to find that in real estate. You're not going to find. I mean, maybe once in a while you'll find Pablo Escobar's house, and you'll find a house that has $10 million in the walls or something, and you bought the house for $500,000. or maybe it's got a um, I don't know, a World War II gun or something buried in the ground in the back or something, or a general's uniform or something. I don't know, but or I saw one time there was a mobile home somewhere and they were just going to throw everything away, and they found out that it was a famous there was all these famous paintings from this relatively unknown painter in Mexico or somewhere, and ended up being worth millions and millions of dollars. But real estate is more of a safe investment because you have a physical asset, and but it can also get you in trouble because what happens when you buy a house and you don't and a flood comes and you don't have any flood insurance and your house gets washed away? Well, then your house is worth zero. The land's worth zero because you can't rebuild on it, and you lost everything. And what happens if you buy a house and you can't find anyone to rent it, or you get a renter and they don't want to pay any rent, and then you got to keep going to court every month and taking them to court, and they still don't want to get out, and it's just a headache. And there's more real estate agents in this country than there is houses, so that tells you something. But no, I don't think real estate is going to keep going up. I think people right now are getting greedy, and when people get greedy, you should get fearful, because people operate on two human emotions: greed and fear. And when you know that, and you see that people are panicking when they look at their 401k and it's dropped 30% this year, or last year it dropped 30%, and then it drops another 10% or something like that. Like, people are panicking. They need that money to retire, and that money just went poof. It vanished into thin air, and around the world, probably, there was $15 trillion that's probably been artificially pumped into the economy at one point or the other, that really, for true equilibrium to be established, they have to get rid of $15 trillion in the markets or in the economy. But I have a feeling they're just going to keep printing money, money printing, and but as long as you're buying assets that can compete with inflation, or at least stay ahead of what historical inflation is, 2%, you should be fine. Anyway, thank you for listening to my rant. Y'all have a good night.